Welcome to Monday's Market Outlook here at T3Live.com. Matthew Buckley, the Chief Options Strategist. And the market's just kind of wallowing around here, mainly taking a brief respite from last week's just massive rip-your-face-off rally, not based on anything good here in the United States, but more or less on what the Bank of Japan Governor Kuroda did by coming off the turnbuckle with essentially their own quantitative easing. The Nikkei having another just banner. It was up 1,600 points, and the dollar yen trade up 5 handles since we actually ended our QE. So very, very interesting, and that's why I think our market's kind of wallowing around. Is we kind of cheered on that bad news, right? Because whenever a central bank needs to get involved and actually dump some quantitative easing into the market, it's not for a good reason. It's usually for a bad reason. So that's why I think one of the reasons we're walling around here. We're also walling around because of China. There a couple of PMIs came out of China. Obviously, the housing market, their export issues, a lot of warts with the China trade right now, and we know that. We've briefed that at TGO, but China's still going to be the number one world's economic superpower here in about a year. So there's the HSBC final manufacturing PMI, came in line 50.4, but I think the reason we're kind of seeing that softness out of China is obviously because Friday night, after everybody was trick-or-treating there, they came out with their manufacturing PMI, which was a miss, a 50.8. Okay, so a couple of their PMIs, one in line, one soft. So that's what's going on out of China. Interesting report from the NAR, the National Association of Realtors. First-time home buyers have collapsed to a 27-year low. That's absolutely crazy. Of course, the NAR is going to tell you it's stringent credit standards, but I'm going to tell you it's these folks, these millennials, have less disposable income, and the number of them living on their parents' couch out of college, settled with student loan debt, is through the roof. Okay, so. Yeah, obviously banks aren't lending as much as they used to, and the lending standards are a lot more stringent than they used to be. But still, to ignore that the economy just isn't good, and that these people aren't finding great jobs, right? 4-year degree, and they're going to work at Starbucks. That's not a good thing. Okay. In all things Apple news, here they come again off their own turnbuckle with another bond offering. Could be as early as tomorrow, and it could be priced in euro. Could actually be issued in euros, which is very, very interesting. So very good news out of Apple, I guess. Here's an Apple trade in our urgent alert model portfolio. So $4,300, a nearly 200% gain on this trade in Apple alone. A bullish double vertical that we placed about a month ago. So a month, $4,300 on one Apple trade is pretty cool. So I'm liking that as well. Liking all things Apple, and it looks like it's heading up. As far as flight schedule for the rest of the week, we have a big week ahead. Obviously, tomorrow, thank God, is the election. Let's get that over with. But today we saw some mixed numbers out of the United States. We saw ISM manufacturing PMI was a little bit of a beat, but construction spending just absolutely imploded, and ISM manufacturing prices were down. We're getting vehicle sales throughout the day, some hits and misses. Tuesday, we'll get some factory orders, and then Bank of Japan Governor Kuroda is going to speak. That should be very interesting based on see what he says. His QE's doing and how the market reacted. Wednesday, we obviously get ADP non-farm payroll, which means Friday is our unemployment day, right? Thursday, though, we're going to see some preliminary non-farm payroll productivity and unit labor costs. We'll see some Fed heads and the Madam Chairwoman speaking throughout the week. And then, obviously, like I said, non-farm payroll, our unemployment rate looking to stay below 6 and north of 200,000 jobs created. Average hourly earnings, there's Ms. Yellen speaking, and consumer credit. And the trade balance Friday night out of China sometime. Okay, so big week ahead. There's some earnings, Alibaba, some other folks coming out with earnings this week, but we're more or less kind of running through the tape here at the end of the Q3 earnings race. AIG's tomorrow. I'll be watching AIG because we have a couple AIG positions on. But should be an interesting week ahead. Do we keep having this kind of melt to the upside? Here we are north of 2,000 again, and you guys know, or at least my TGO traders know that I talk about these round round numbers as a magnet level. This 2,000 level has kind of been a magnet. We got pulled up to it, wallowed around. We imploded, obviously, a couple weeks ago, and now we've just had this. I call it the. Let me get rid of this. It's going to be kind of a square root, I think here. Sideways implosion. We're going up here, and I think we're going to start leveling off here as the market looks for the next catalyst, either to the up or to the downside here. This is the first full month without the government being involved in capitalism, without QE. So it'll be very interesting to see how we do going forward. Okay, I got to run, folks. Have a great rest of your day. Happy hunting. Make sure you hedge. I'll be back with Tuesday's market sit rep. We'll see.